Hello. Hello, ladies and gentlemen. Good morning to you from this part of the world. And depending on whatever time zone you are tuning in from, I wish you a good afternoon and good evening. I'm very excited to welcome you to our final edition for the week of the Forex Morning Mastery, where we intend to review how well we have done so far this week across the assets we've been monitoring, and of course use the information we can gather from both technical and fundamental perspective to strategically position ourselves for today's trading session. You're highly welcome on board. Glad to have you guys around with me this morning. My own name is Sheriff Daramola, and for the next 40 minutes thereabout, I'm going to be your host as we go through the financial market together. And for those of you who are joining us for the first time, you're highly welcome on board. I'm very excited to have you join me this morning. The Forex Morning Mastery is an educational avenue where we all come together as a community with the utmost intent of identifying practical trading opportunities as we prepare for that particular day's trading session. And of course, we run this 3 times in a week: Mondays, Wednesdays, and of course Fridays. The usual time is 9:30 a.m. West African time, 8:30 a.m. UTC. And feel free to engage with us, engage with me in the comment section. If you have any questions whatsoever, if you need clarifications as regards to our analysis, or you need some um, questions to be answers about the financial market, anything whatsoever which has to do with the financial market, feel free to drop them in the comment section. And trust me, I'm here and willing to be of help in that regard. So, once again, I welcome you. And please do not forget to give the video a thumbs up. Your likes are very, very important to help this community growing. And at the same time, it also serves as a source of inspiration for me to continue to do this. So, with that said, here we will be diving right into the business. And this time around, I've decided to change the routine of our analysis. So, instead, we will be diving deep into the assets we are monitoring for this week. And of course, the first one we are looking at today is the US crude oil commodity. So you can also call it the US oil spot. And so far this week, the market has been very, very choppy. Though we had an instance where price climbed up, we had instances where price dropped to the downside. And in fact, if you look at the screen right now, you will see that price hasn't really moved further away from the structure we identified at the beginning of the week. So let's rewind, look back into Monday's session. What did we see on this chart, and what were the implications of price action around the structure? Now, right here on Monday, on our execution time frame, of course, after identifying our key level for the week, which was duly situated along the 66.50 level, as you will see here. And a quick reminder, you know how we use our key levels in this community. As long as price remains above the key level, we look out for buying ideas, and if price drops below the key level, we look out for structural details that support selling ideas. Now, if you look at the structure here, you will see that at the beginning of the week, the market was a little bit bearish. We saw how markets started the week on a strong bearish note, right around the $66.90 level, dropped into the $66.25 level, where we saw a little bit of resistance from the buyers as sellers found it difficult to continue that particular momentum. And the emergence of continued buy pressure from this area was a red flag for us to capture a bullish move. And as a result, we joined this uptrend scenario. I gave us an update on this one very early on Monday, even before the Forex Morning Mastery session on my TradingView platform. So we had our first buy from the $66.50 level, and then we rode it all the way, and then we added another one at the break of the $66.90 level. Now that momentum did not last long. We saw price move about how many pips was that? 79.80 pips before that strong bearish engulfing candle took us out of that position. Then price dropped down, triggering our sell stop order, as you will see here. After being taken out with some small size of profit, we saw price move over how many people? Over 100 pips before price contracted back into entry point. And most of the path of Tuesday stroke Wednesday session, the market was a little bit choppy, and during our live session on Wednesday, we decided to buy again if price action breaks out of that resistance line, which actually happened, and we saw price move another 100 pips before a crash happened again. And since then, price has come back into entry point. So yesterday, I didn't really put up with any trade, neither did I give any update on this market, as I was monitoring the structural detail to plan for today's trading session. And of course, if we look at the fundamentals regarding the market, it is more of a bearish situation in this market, taking into account the global demand concerns, where there has been fears of weaker demand due to escalating trade tensions, particularly Trump's recent threat of a 200% tariff on European wines and champagne. And this obviously could weigh on oil prices, as it will reduce business activities. Importation from Europe too will also reduce, and of course it will affect negatively the demand for crude oil. Then there is this IEA report that we saw yesterday, where the IEA warned that the global oil supply will outpace demand by 600,000 barrels per day in 2025, primarily due to the increased US-led production. And of course, what this simply means is that supply will be way higher than the demand. And of course, you know our simple economics: when supply increases, what happens to prices? Due to the surplus nature of that commodity, price is definitely going to crash. And then if we look at the ceasefire situation at Russia-Ukraine situation, the geopolitical risk premium on oil could diminish if this comes to fruition. So for me, I still strongly believe that the path based on the fundamentals is looking very bearish. However, if you look at the structure on the chart, remember we had this beautiful ascending trend line marked out at the beginning of the week after capturing the character of price action since Wednesday of last week's trading session. And look at how beautifully price action had respected it at every point in time. Though we had a little bit of a breakdown here, but price immediately climbed back up and had maintained the momentum above the trend line. So what this simply means is that market participants still have some confidence of buying the crude oil. And what could be the driving factor for this? Well, I can tell you that the US dollar hasn't done pretty well in the last couple of weeks. In fact, the price of the dollar is hovering around its lowest point in recent time. And of course, this is due to negative figures from the US economic docket. During the course of the week, we saw the PPI and the CPI data, which are inflationary data, coming in way below market expectations, showing us that inflation is thinning out in the United States. And what is the implication of this? The Fed's this has increased the sentiment of the Fed's cutting interest rate maybe as much as 3 times this year. And of course, this is likely going to be decreasing the value of the US dollar. So what this simply means is that it makes the US crude oil commodity cheaper to buy, because if the value of the US dollar drops, remember, the US crude oil is a US dollar denominated asset. So what this simply means is that those who have other currencies trying to buy the US crude oil will be buying the dollar at a cheaper price, hereby increasing the value of increasing the demand for this commodity. And as you can see, though the momentum has been choppy, but this ascending trend line here has continued to maintain this uptrend scenario. Then another factor that could also influence the upward scenario, which we are seeing right now, could be the result of the US imposed sanctions on Iran's oil minister. This is a recent development, I think yesterday or 2 days ago, and the shadow fleet vessels as well, restricting Iranian crude supply, which may also put some support to oil prices. And of course, this has also increased buying interest at lower levels. The oil price is very, very cheap. The market has been hovering around the $66.50 level since the beginning of the week. So for me, based on this current structure and for the fact that price is still trading above the ascending trend line and the structure we identified at the beginning of the week, remember this was the range bound structure we saw here, I want to maintain a bullish bias. Now, what are the key things that we also need to take into account? We need to also watch out for US-Iran tensions. Very, very important. OPEC Plus announcement on production cuts is also going to be on everyone's radar, especially if we are looking at trading the US crude oil for a long-term perspective. However, the overall sentiment still remains structurally bearish, with supply side pressures outweighing geopolitical risk. And shorting remains the most favorable strategy at this point in time. I'm talking about long-term perspective. But in the meantime, while we prepare for today's session, I'm seeing a potential rebound in crude oil prices. And if we take into account the structure we identified here on the 4 hours time frame, remember at the beginning of the week we had this beautiful descending channel marked out. Look at the support line of the descending channel, and then we have the resistance line here, as you can see, and price appeared to have broken out of the resistance line of the descending channel, and look at a retest of structure inciting a potential uptrend scenario. So for me, I want to consider buying the crude oil, at least in the meantime. I want to see how far that momentum is going to go, looking at the $69 area as a TP target for the meantime. And please note that we want to ensure that as soon as price moves significantly in our favor, we move stop losses, secure some profit, as anything could happen, especially as we look forward to the there are 2 reports we are looking forward to today. March 14th, we are looking at the Michigan Consumer Sentiment Index, and of course the consumer inflation expectation, which is usually released by the University of Michigan. And of course, for those who don't know, this consumer inflation expectation is a survey that measures what consumers expect inflation to be over the next 5 years. So if it comes in higher than what the previous month, which was pegged at 3.5%, then we may likely see a resurgence in the US dollar, making the US crude oil commodity expensive, hereby exerting selling pressure. However, if this data comes in way below expectations, then definitely this is going to favor the US crude oil, as the devalue of the US dollar is what the buyers of crude oil are looking for at this point in time. So as a result of all of this, I have been able to place a buy position. If you look at the bottom of your screen at the moment, you will see I already have a buy position triggered above this resistant line at the $66.90 level, which lines up with where we had our second buy at the beginning of the week. So hopefully this momentum continues. Currently we are running with about $10, $11 pips in profit. I just hope that price continues to the upside. So like I said earlier, I keep maintaining a bullish bias here based on two structural details here. One, price is above the ascending trend line, and second, price is above our key level for this week. So as soon as price gets into anywhere close to the $67.50 level area here, remember this is the supply niche for the week, $67.50 area. Price moves close to that area, we move all stop losses, secure the current buy positions while we look out to see how the market reacts to this supply niche. If a breakout retest happens, definitely we will be adding more buy positions to our existing trade. But trust me, I will definitely be with you in the comment section of this video, in the comment section of my Telegram platform, and of course on my TradingView platform, to give us updates around that area when price get to that point. So I maintain a bullish bias on a short-term perspective, and the only condition that will make me sell around the structural detail we have here on the 1 hour time frame is for price to break down both the key level at the $66.50 level and of course this ascending trend line. So a breakdown retest will be the only condition that will make me sell the US oil spots today. So I doubt if that will happen actually, but if it does, we are prepared to capitalize on that move. So currently we maintain a bullish bias. Let's see how far this momentum is going to go. If you have any questions as regards to what we have talked about so far, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions as regards to this analysis or as regards to the financial market before we move on to the next asset on our watch list. Stay tuned in. All right, so in the absence of no questions, no comments, I want to assume that we are all on the same page. So we have a buy position triggered already and I hope we've marked out the structures accordingly on our chart. We are definitely going to be using this to navigate this market today, and like I said, let's ensure that we adopt a well risk management strategy in place. So if price moves close to the $67.50 level, like I said, this is our supply niche for the week. We move all stop losses, secure the current buy position. So I wish us all the best of luck on the US crude oil commodity. So moving on to the next asset we are looking at. We are looking at is the USDJPY, and just like we had projected at the beginning of the week, we can see price had moved significantly from that particular structure we marked out here on Monday. But unfortunately for me, I'm not able to be part of this massive move. I think I got out of this trade, moved my stop loss somewhere around the 148.250. So I was taking out and look at the resume buy potential around this area. I guess I had moved my stop loss too early. Look at how price had just moved over 180 pips from that area we marked out. Let me quickly share with you what things were looking like during our analysis on Monday. So we had a descending channel, remember, on our 4 hours time frame, which emphasized that since the year 2025 started, the price of the US dollar has been dropping against the yen. Of course, the yen's economy, the Japanese economy has been doing pretty well since the beginning of the year. They had robust GDP figures. They had wage growth, inflation increased. In fact, all the data coming in from the Japanese economy has been very, very impressive. And of course, we also saw the first interest rate hike from the Bank of Japan, which further boosted the yen against the US dollar. And as a result, the yen had dropped significantly since the beginning of the year. And on the other side, the US dollar hasn't been doing very well due to this uncertainty surrounds Trump's tariff situation, and of course the economy as well hasn't been doing pretty well. And this week, of course, we saw the US consumer price index. Let me show you here. So we saw the consumer price index coming lower than market had expected. Look at what we are talking about here. The market were expected a 0.3%, which was way below the previous month consumer price index. Now look at what happened. The actual data came in 0.2%, which was way below the previous month, and of course below the expectations in the market, further increasing the chances that the Feds are likely going to be cutting interest rates. Then we also had the PPI data, that is the producer price index. That is an inflationary data from the producer's perspective, and of course the data also came in way below expectations. Look at the previous month, we had a 0.6%. Market were looking forward to a 0.3%, but what came in was way below at 0%, which further increases the chances that Feds are likely going to be cutting interest rates due to the reduction in inflation. Now, what are the chances? What are the reasons behind this US dollar growth, despite this inflation coming in very low? Well, I want to attribute the recent rise in the US dollar to the a positive development in the US-Canada trade talks. And according to reports, they said there will be enough Democrats vote to prevent a US government shutdown as well, which obviously has reduced market fears, leading to increased demand in the US dollar, making the dollar a little bit attractive for investors at this point. And remember, the dollar is very cheap at this point in time. It's in its lowest point this year, and market participants could capitalize on this cheap US dollar to push price a little bit higher. Then if we also take into account the uncertainty surrounding the Bank of Japan's rate hike, as the Bank of Japan suggested that global uncertainty could delay rate hikes, keeping the Japan's interest rate lower for a longer period of time. So for me, this could also weaken the yen in the meantime. And as it is right now, market participants will definitely be looking forward to the consumer sentiment. What's the name again? The consumer sentiment index, I'm correct actually, and then the consumer inflation expectations today. And if there is any likelihood of an increase in this figure, we could see a further uptrend in favor of the USD against the Japanese yen. So what are our plans today? Well, based on the structure, I will still maintain a bullish bias, though the major trend is still bearish, and looking at price maybe getting TP target around the 149.00 area, just right around the resistant line of this descending channel, where depending on how price reacts to the structure will determine if we will continue the buy or get ready for another wave of bearish momentum. But pending the time price gets there, let's see how we can capitalize on this, because I have missed out on this one and I want to see if there is any chance for me to be part of that trend again. So look at what we have here on our 1 hour time frame, which is the execution time frame. Price has just broken out of this trend line here. There is this trend line here. If you look at it closely, we mark this out on the 4 hours time frame. Price has broken out of that structure, so I think price is way far away from the current structure. So for me, it doesn't make any sense jumping in front of a moving trend. So we'd like to see price come back to the bus stop, then we can join that journey up. So what I'm considering here is a potential retracement back into the trend line. So what I will do now is to place an alert on this trend line, so I get notified as soon as price gets into that structure. Then I look out for buying ideas. So I will place an alert right away on that structure. Let's see if the market will come back. If it does, and we notice buy pressure here, maybe on the 15 minutes time frame, we will be willing to continue the uptrend move. Maybe TP at the 149.00, that's about 70 pips, or the 149.5, which is about 120 pips. So for me, price is far away from the structure, so I will just have to exercise patience, wait for price to maybe retrace back into structure before jumping the uptrend continuation. But if it doesn't, well, I guess we will just have to pass the trade and wait to see what happens next week. And for those of you who are holding on to a buy position currently, that is, if you are taking advantage of the buy from the structures here or the breakout of the key level, I will advise you to move all stop losses right now, secure the current positions while we wait and see if the market will do a retracement move. So that is my simple opinion on the USDJPY at this juncture. Let's see how the market will play out. Of course, we look forward to this report today. What time is it? 2 p.m. UTC. That's about 3 p.m. West African time. Let's mark out the timing so we can be around to see how the market reacts to that data. So that is my simple view on the USDJPY for today. I still maintain a bullish bias here, but waiting for structures to mature before jumping in, as I have missed out on that particular move. So there you have it. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we move right into the final asset on our watch list for today. And guys, I can see that no one is giving the video a like. Please let's make the like tally with the number of people on board. This is your cheapest and simple way of supporting this community, and thank you very much as you do so. Please click on the like button, please, and let's make the algorithm identify our video. Thank you very much, guys. All right, thank you. I just saw one like now. Thank you very much for the support. I'm really grateful for that. So I still look forward to more likes. Everyone, click on the like button and let's make this tally with the number of people on board. So in the absence of no comments, I want to assume that we are all on the same page, right? And all we have said so far has been quite explanatory enough. So I wish us all the best of luck on the USDJPY. So moving on to the final asset on our watch list. Stay tuned in. Asset on our watch list for today and for this week is my favorite, and that is the XAUUSD, popularly known as the gold commodity. And what a week we have here on this asset. In fact, this is the most profitable asset on our watch list as we watch price action hit another all-time high record at the $2,990 level for the first time in history, thanks to safe haven demand. Of course, we all know the concerns about Trump's aggressive trade policies and their negative impact on the global economy, which continues to drive demand for gold as a safe haven asset. And of course, the expectations where majority of market participants are now pricing in 3 potential rate cuts for the Fed due to signs of economic slowdown and easing inflation further supports the gold commodity. And then Trump's threat of additional tariffs on Europe is also a very, very important factor that we also need to take into account, as this has also triggered uncertainty in the financial landscape. And of course, when there is uncertainty like this, it is expected that the demand for gold will be fueled, as majority of market participants will be taking their capital into non-yielding assets like the gold commodity. And of course, this has continued to support the price of gold. Now, before we go into what things are looking like for today's session, let's rewind and go back to the beginning of this week and what was the structure we were looking at. Remember, at the beginning of the week, we were selling the gold commodity after we identified a range-bound structure between the $2,918.50 level and the $2,090.25 area. And of course, you know how we treat our range-bound structure in this community. Once we identify such, we exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, for the first day of the week, price was not even close to the resistance line, so it was more of breaking down and retested the support line multiple times to trigger our first sell position for the week. We sold actually, and we were able to scoop in some modest size of profit. We saw price move over 250 pips before the bullish traction began. Then during our live session on Wednesday, I think we were able to spot a trading setup on the 15 minutes time frame. Let me see. Okay, yes, we did had a trading setup on the 15 minutes time frame on Wednesday, and this was what we were looking at on Wednesday. So we saw this trend line. Price was finding higher highs and higher lows, though it was confined within a range-bound structure here. And what we decided to do here on Wednesday was to buy the break of this level. That is, if price maintains above, hold on a second, I want to extend this 2009-15 level out. So this was where we were looking out for buying ideas. We were looking to buy above the 2009-15 and sell below the 2009-11. We had a sell position triggered. Remember, we were taking out in a loss on that one, but fortunately for us, we saw price climb back up above the 2009-15, giving us the privilege to recoup the losses and of course incur some profit on top of it. And as you can see, I had my TP. I never knew price would move this far because I was very considerate and defensive due to the fact that price was trading around uncharted territory, and that the fear that market may crash from this area was also on the table as well. So I had my TP around the 2009-28 level, dovetailing to about 130 pips for me on Wednesday's trading session. So that is that for us on the XAUUSD. And for those of you who kept on buying, well, kudos, well done to you for capitalizing on more opportunities on this one. Yesterday I was not on my workstation, so I wasn't able to join this uptrend scenario, but for those of us who capitalized on it, well done and kudos to you guys. Now, as we head into today's trading session, we are beginning to notice that it appears that the momentum is likely going to continue, given the strong fundamental support from the Fed rate cut expectations and trade war fears. Of course, traders will continue to look out for buying opportunities on any form of pullback we see around this particular structure, especially around key support levels that we are going to be talking about in a moment. Then the anticipation of the Michigan Consumer Sentiment Index and the inflation expectations could also trigger some sideways trading activities, which is very common, especially on the final trading day of the week. Now, to help us navigate this market today, for those of you who are with me on my Telegram and TradingView platform, you must have gotten an update to this one, as I shared with you this morning this simple trading setup after monitoring the character of price action in the last 12 to 15 hours. And of course, we already have a buy position triggered. You can see that right at the bottom of your screen. Currently, price is running with about 70 pips in profit. And for those of you who capitalized on this opportunity, well done, and kudos to you. So before we go any further, I would like to say here, you want to be moving your stop losses accordingly right now, secure some profit at this juncture. as we continue to monitor price action. So I moved my stop loss on my own position right now. You can see it at the bottom of your screen. So this was the setup I marked out this morning, and immediately I saw it, I updated us on the Telegram and TradingView platform. So I saw a range bound structure after identifying an uptrend scenario, and the persistent buy pressure around the 2,982 area was significant for me, was a red flag actually that sellers may likely be losing momentum and that the market is still very confident that price will climb to the upside. And this triggered our buy position for today at the 2000, above the 2,987. So kudos, well done to everyone who capitalized on this and of course stayed faithful to our analytical approach. So at this juncture, I don't know, price may likely just continue to break more records around this area, and in fact the tariff war escalation, the softer US inflation data are not helping matters at all, as the demand for safe haven asset will continue to rise based on all of these factors. But let's see what happens today from the Michigan Consumer Sentiment Index and the inflation expectation report. If it comes in higher, this could probably cap the uptrend scenario and cause a massive crash from this particular area, as market participants may start taking profit ahead of the weekend. And if they start taking profit, we could see price drop significantly to the downside. So, but in the meantime, let's ensure we secure all positions right now. Around the $2,990 area is looking promising. So let's move all stop losses, secure it around that area while we continue to monitor price action. So I will put my TP at a $3,000 mark. I guess we may see a crash as soon as price tests the $3,000 mark. So I'll put my TP right there and let's see how it goes. So for now, I'm not considering selling unless I see a breakdown retest of structure. One of the structures I will be looking at is this ascending trend line. So I would like to see price breakdown, retest the structure, and in fact I might not be willing to even sell if I see a breakdown retest of structure, except if I see significant confirmations, which I will definitely be sharing with us on both my Telegram and TradingView platform. So a bullish bias on the XAUUSD. Well done to everyone who capitalized on this. And if price comes down back into the structure, it could be into the trend line or the 2,987. We look out for reversal setups like double bottom structures to continue the uptrend move. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give us updates as at when due. So this is my simple view on the XAUUSD. I hope I made myself very clear. If you need some further clarifications, feel free to let me know in the comment section. So I will take another 5-10 seconds. Let's see if there are any questions before we start rounding off on today's Forex Money Mastery. Alright, so in the absence of no questions, I want to assume that we are all on the same page, and we are of course ready and pumped up to take advantage of any opportunity the market presents to us today. And to help us strategically position ourselves for the next move, we have trading setups marked out, simple trading setups marked out. I do hope you've marked out those levels accordingly as we have done, and let's see how the market is going to be reacting to the structure. Let's ensure to exercise patience and allow the structures to mature before we jump into any positions. And always remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure to have a well-defined risk management strategy in place. So it's on this note, I would like to wish us all the best of luck. For the newcomers, I hope you are able to gain one or two things from our discussions here today. If you did, you want to be part of our subsequent editions, we're coming back again on Monday morning, where we shall be reviewing the market again and looking out for new trading opportunities. And of course, if you're yet to subscribe to the channel, please do right away, as you don't want to miss out on the weekend video updates we normally share in preparation for the following week, and of course the Forex market prep Sunday sessions, where we you come to the platform to drop any asset you want us to analyze for the week ahead. So looking forward to seeing more of you guys. Trade smart, trade consciously, and do have a wonderful evening and a beautiful weekend. Bye.